So back a few years ago, car insurance used to be about ranking and how does each individual rank in a certain specific area, zip codes, territories, things like that. But lately, the last few years, you may have noticed that some of the rates have changed. Yes, that's a completely different video, but more so the tiering has been different. And what insurance has done, and most states have done, is they've allowed them to tier people into different rankings. It's basically a way for an insurance company to say, here's the profile of the person we're looking for, and then here's the rates that fit that profile. When the profile doesn't fit the type of company, you're going to notice that it's not going to be really a good pricing for you. For example, if you go with a really high-end company, that's called the preferred tier. If you go with a middle-end company, that's called the standard tier. And then if you go with a high-risk company, that's called the non-preferred. Unfortunately, that's the names they gave it, so I'm sorry if you're non-preferred or whatever the case is. You know who you are. It was me when I was a teenager, and a lot of you are out there that are that way. But that's the tiering system that they've created that helped them create the model that does the pricing. But why does it help you in the long run? If you're the high risk and you're going to that non-preferred tier, you're actually going to get a better price than if you went with the preferred tier. So knowing what company is which tier and what type of person you are or what risk you are plays a factor. We're going to go over the factors that actually make up that tiering system. But before we do that, let's talk about some of the changes that they've started to make. Because in all honesty, a lot of people don't know this was even a thing, let alone that it changed a few years ago. Well, now they're starting to change a little bit more where companies have individual tiering within their tiering. Basically what they call it is a matrix system. So some have a preferred 10, some have a matrix number that they'll never share with the agents or the underwriters or anyone because it's their model, right? They don't want people to cheat the system. And some have different models that have different levels of tiering. So how does that affect you as the customer? If you're in the top tier, let's say you're in that preferred tiering, and you're in the company in one of their models, let's just say they did 3 models, and you're preferred inside of a preferred company, but then you get an accident or you have a ticket or something happens. You may even see the rate go down in some companies because what happens is it's a category. It's what I call on this channel as a profile. The tickets that you have, the area that you live in, the credit score that you have, all of these things, your payment history, how long you've had insurance with that company, all of these play a factor. There's probably 50 plus discounts or rating factors that companies actually use to determine either a discount or a rating factor. In all honesty, I see them the same because they either charge you a lot and give you a better deal, or they just give you a better deal if vice versa. But there's legal things that they're doing there. Either way, whatever level you see is sometimes you're the worst person in the best tier, and that worst person is going to pay more than everybody else. When you drop down to the top person or the best person in the next tier, then you might actually get a better deal. Now, that's very rare. It doesn't happen often. I've seen it happen, so it's possible, but it's not a common thing to have happen. And I know your next question is what companies are which tiers, and we'll get into that here. But before we do that, the other piece that you need to know is that it's not just you as an individual. It can be, but the risk has changed so much. There's been too many claims in the last couple of years where people weren't on the policy. And yeah, sometimes somebody's just lying about it and they get away with it, or they get caught and now there's a whole lawsuit. And there's other situations where they just didn't think about it. So some of these situations have come up more often than they used to, and that's causing insurance companies to rate the household. For example, if you were to look at your policy today and you have 2 other people that live with you, but they both have their own insurance. In most states, like ours in Michigan here, you're going to see that I have to either add or exclude them. There may be a company or 2 that says we don't care either way, but they're usually going to follow suit with this soon. What's happening is they're saying, okay, we can exclude them if you say they're never going to drive my car. I get that. You can say that, but when something happens, an emergency, you're mowing the lawn, you cut your toe off, they're going to drive you to the hospital. They may not have a car, so they're going to hop in your car, drive you to the hospital. What if they get in an accident? Now, who's covering that? Your insurance has to usually pick that up unless they aren't listed on the policy. Now you can fight it, and honestly, most of the time people win those lawsuits, but no one really wants to go into that lawsuit because now you're spending months doing this, you're getting out of work, you're still recovering from your injury, whatever those cases are, and all of that piece is happening. It's just messy. It's not really anything anyone wants, and they're paying to defend themselves, you're paying to sue them. It's just a headache. Most of the time, if it's a smaller claim, the insurance is just going to pay it, but that's a loss that they're incurring that they shouldn't have had. They should have had that person listed on the policy. Now, more often, I see the situation where there's someone in the house. We know they're our cousin, our brother, our whatever, and they have a bad driving record. They've had 2 accidents, they've got a speeding ticket, they might even not have a license anymore, and I don't want you to know as an insurance company that they're there. I recommend you still go down that road because there are companies that are lenient and you just have to figure out the situation. So in that case, a lot of people just don't talk about them. They try to hide them. And if they show up as a possible person in the house, oh yeah, he moved out or whatever the case is. And now a claim comes on file that has that person involved. And now you've got to go through all that piece. So because of this, a lot of these problems we've been seeing, these insurance companies require that you either exclude them, which means even if they drive the car, give them the keys, let them go. It's not covered. Nothing's covered when they're the driver. Or if something happens and they get injured and now if it's part of your insurance, they're just not a piece of it. Or you list them as a driver and you now have a rating for them. So they're rating the household if you have 2 or 3 or 1 or people, however many people you have, whether you're in, typically I've seen it in just about every state. So if you know of a state that doesn't do it this way, let me know in the comments below, all my agents that are watching. I think Tennessee and Michigan and Virginia and Ohio and all of these states that I can think of, most everyone does households. It sucks because sometimes as the guy trying to sell you a policy and I give you this really good price and then someone shows up and oh yeah, they've got their own insurance, that's fine, I'll exclude them. Some companies don't exclude their history. So because of that same reason, even though they might have a car or not, it doesn't really matter there, that they might still affect your policy to a point. A lot of times it's $5 to $15 extra every term. In some cases, I've seen it hundreds more because of the history of that person. But Mark, I'm excluding them. Yes, you're excluding them, but not the risk of them, which is lowering it. You're excluding the person being a higher risk available to you, but it doesn't stop the risk from being there. It's the same as driving down a neighborhood you know you don't want to open the door or roll the windows up, and you know you're driving through there. You could go around it, and it would take you 10 minutes more. But do you want to save the 10 minutes and go through there, or do you want to go around it? So what are the companies that we're looking at? Let's take a look at some of these companies. And these are from my personal experience, what I've seen. I don't know what they're listing, if they say it differently, but everyone that I've seen in the last 12 years. State Farm is probably one of that preferred to standard tier. Either one of those, you're a fit. Honestly, I would check them even if you're a higher risk, because maybe not in the market today, but in the future, if this video comes up and it's 3 years since I made it, I would consider them a possibility just because sometimes they're okay. Like in our state right now, good luck. If you're even in the middle tier and you have 1 ticket, they're not going to like it. And it's going to take a week to get the policy. It's just a headache. Allstate, they're very similar to the State Farm policy, which is your preferred to non-standard tier. They don't really fit, at least in the states I've written in, or at least I've seen, really any non-standard policies. Nationwide is teetering on that preferred to non-preferred. The problem that they have is they don't really have the product availability. They charge for everything a la carte, and it's just a little bit clunky. At least in our state, they don't allow you to do a full pay. Right now, they don't want the business as much. They're slowed down just because they have a lot of pre-bind pauses where you have to prove a lot of stuff before even the preferred person gets in the door. So there's a lot of hurdles that you have to jump through. In that case, a lot of people don't go to them in the first place. Great company, but right now they're just slowed back a little bit. Safeco is that preferred, mostly preferred, and a little bit of the standard. So your Safeco and your Liberty Mutual companies, the Liberty owns Safeco, and those companies tend to be that preferred in my mind. Great company, has all these cool packages. You're going to pay a little extra for them right now, at least in most cases. Sometimes it saves you money, sometimes it doesn't. But in most cases, they're going after that preferred market. Progressive, you'll hear 2 different things. So Progressive is one of my favorite companies just because of their plan for the future. They're very ahead of things. They're also very large, and they want to be a standard carrier and a preferred even because they really want home and auto as well. The thing is, they haven't really gotten to that level yet. They purchased a few years back a major company for home, and because they're so large, they have to fight claims a little bit harder, so there's not really a good gray area for them. They prefer the standard customer or higher, but they're really competitive for the non-standard. That's one of the reasons they're such a large company, is because your non-standard people do get really good prices in that company. Geico is the same way. They are going to say that they want preferred or standard, but they're also a really major fit for young drivers, for higher risk, so they're that non-preferred type company. The General, your commercials say different, but they, in my opinion, have always been the non-preferred. They are the high-risk kings of the world, at least everything I've seen. Now, whether they're changing that, I guess I should do some more research on them. It's been a while since I've looked them up. Take that one with a grain of salt, but at least from my opinion, I've always seen them as all non-preferred. Travelers, they are preferred, even though the opposite, they say standard. Right now, they're very picky, especially if you're doing home insurance and auto insurance. Most states, they want the roof to be newer. They want the cars to not have a ton of claims or accidents. Otherwise, their rates have skyrocketed quite a bit for the people that aren't a good fit for them. Now, that being said, they are actually very competitive. So a lot of the policies that I see in many different states do end up with Travelers. They're becoming one of the more common companies to lean towards. USAA, they're actually none of these. They're probably the preferred to standard because they really just are a fit for anything military. If you have or are related to someone that has been in the military or anything like that, you can't even get into their doors unless that happens. Now, if you're high risk, they're usually not competitive at all. I've gotten a lot of customers, even non-high risk, that we've seen come over to different agencies just because their rates have been changing a lot. Now, some of you may have heard of a company called Titan Insurance, and Titan Insurance, if you don't know this, is actually nationwide. It's their sub-companies. Most policies are Titan now. They used to be a high-risk company, and technically Nationwide's high-risk division. Although I'll be honest with you, I haven't seen a policy in over 2 years that hasn't been Titan. So I think that's become their standard. I would take them out of that non-preferred or that high-risk category and put them into the standard. So a little bit of a secret, if you're leaning towards a high risk, there's also different state-regulated companies that most places can offer. Not many agents do it because it's not typically a fit. That higher risk tends to, unfortunately, make your insurance book, as we call it, look a little bit rougher. And so when companies look at appointing you and growing with you, and they look at your whole book as a whole piece, they don't like to see cancellations and all of this stuff. And the higher risk, that's just part of it. When the rates go crazy, you're not going to stay with them. So the ability to keep the customers the larger piece. But in our state, for example, there's a company called Michigan Basic. And Michigan Basic is strictly that high risk when you can't really find those other options. I've got a few friends that actually write those policies, so those are good to lean towards. But the reason I mention that isn't because that's an available option. It's because when you research this, if you go online and Google, what are the high-risk insurance companies, or what are these types of insurance companies, you're honestly only going to get a few companies. You're going to see State Farm, Allstate, Amica, who's the preferred to non-standard as well. Nationwide, you're going to see the 10 major companies, these large corporations. And the thing is, you're not going to see them because they're common. You're going to see them only because most of these websites are built to gain your information, and they sell your information to those companies. Unfortunately, what happens is they're the only ones that are willing to buy the information, so they're really the only companies that they compare. That's why you see a lot of my videos based on articles. A lot of these companies are the same. That doesn't mean that there's not better companies out there. They can be higher risk because they are smaller. You aren't necessarily in a bad boat if you do the research, but know that a local agent might have better offers for you depending on the companies that they're appointed with. If you are interested in checking for different insurance, whether you're looking for the standard or the preferred or the non-preferred, go ahead and fill out the link in the description below. There's a quote that you can fill out, and that directs you at least to an agent that can help you with finding the right fit for you. In the meantime, let's talk about the factors that actually determine where you are, whether you should be looking at the preferred, non-preferred, or the standard. It's really simple. We've made a couple of videos about this, and it's really about your habits. It's how well do you drive? There are ways to prove that to some companies, and there's telematics systems or usage-based insurance type programs that you can plug a device in your car or check it on your phone and it watches you drive for 90 days. That's really good to help a company know that you're not that higher risk. Now, your driving history, whether you have tickets or accidents, it's called a CLUE or an MVR report, the motor vehicle report. And those kind of tell a company that you are or aren't a high risk. You have or haven't had a lot of claims. The area that you're in or moving to makes a big difference. So if you're going to move, check the rates with your current company to see if you end up changing the type of risk that you are with them. Paying attention to your credit score helps a lot with insurance. It's called an insurance score in most to every state, where it's their legal way of checking the motor vehicle report with your credit, with your history, with your payments, and all of these things essentially. But the overall factor is if you improve your credit, that's going to improve that score. Now, before you go all crazy crazy. If you have decent credit, typically anyone that has a 630, it used to be, it's probably a 650 and above. Really, if you have a 700 credit score or better, you're probably those preferred 10s, or you're probably those higher matrix levels that companies want. They don't typically go higher than that. So you could have a better score, which might put you up to that next spot, but 9 times out of 10, it's not going to make that big of a difference unless you have a really low insurance score. Some of the factors that you're going to see that are going to affect this is your age. The younger you are, the higher risk you are. The older you are, the higher risk you are. There's a sweet spot. There's a ton of videos you can watch on here that go over that. Gender in some states have been essentially abolished, but gender has in a lot of states still made a difference. Women tend to be, in most areas, tend to be better drivers than men, and commonly you'll see that be a part of it. Marital status doesn't really play a factor as much with most states, just because that really shouldn't determine whether, if you're married or not, doesn't determine if you're a good driver. I guess there might be a way, but they haven't been able to correlate it. So most of the companies have outlawed being married or not. Homeowner, they've outlawed that as a thing as well. The location we just mentioned, the experience that you have from the age that you got licensed. So if you got licensed at age 18 and you're 25, you have less history than a person that had a license at age 16. So you're going to see the difference in the cost. It's minimal, but it still plays a factor in the risk. Previous insurance, we mentioned that. The longer you've had one company for a certain amount of time, the better an insurance company is going to look at you. They call it a longevity discount that they'll give you for that reason. Now, if you've gone from one company to the next, a lot of companies still take that into consideration. They just give a bigger discount if you've been with the same company more recently. But Mark, what's the benefit of all these insurance companies doing this rating tier system? It actually got cheaper when they did that, because for those of you that have a medium to good risk, if you've worked on your insurance score and you've made sure that your driving history is good and that your people in your household are driving well and all of those things, those are essentially responsibility factors to a point. You can't really control the people in your house. But for those of you that hit those higher to mid tiers, those companies love that. I'm a perfect driver. I've never had tickets. I live in a good area. Why is my rate going up? Well, that's to combat that. If they didn't have this tiering system, your rate would be even more than what it is today. I get it. Rates have been going up probably 20, 30, and I actually just saw 121% yesterday. So there are some different rating factors that are playing factor, but that tiering system is actually benefiting most of us. The unfortunate part is some people will get lumped into the non-preferred carriers, but that doesn't hurt you either to a point, right? Your history matters. If you have 3 tickets and 4 accidents, you're high risk. That's just part of it. There are companies that are good fits for that. And if you were lumped into one company, we were all just one shared network, you wouldn't even be able to afford the insurance because you're going to pay 10 times more than everybody else. You can now lean towards those companies that are better fit for you. So what do I do now? Thank you for the information, but how can I use this? Take a note and go back and watch the part where we talked about the companies that are preferred and non-preferred. Take mental note. Honestly, it's not down to every little percentage. You can average and know where you're at just by thinking about it. It's not that complicated because the range is so large. It's not down to these little pieces of science. If you think you're teetering on one or the other, try a quote with an agent that shops multiple companies. That's what the link in the description is there for. Working with an independent agent allows them to shop some of the preferred and the non-preferred companies at once, without you having to do all 10, 20 phone calls. You just work with one person. But in all reality, the next step is to know 2 things. You need to know how impactful your insurance score is, because that is a major factor. I'm going to link a video that goes over the insurance score. There's really 4 pieces to it that you need to know. If you already know you're a good fit, you're at medium risk or whatever the case is, and you just want to see how you can get a little bit better of a deal, I'm going to put my discount video here for you. Go ahead and check that out, see if you're missing any discount. Hopefully this is helpful. Thumbs up if you liked it. If you have questions, leave them in the comments below. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.